The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach we go, dear friends, and the tail of the tape is slightly different today. We're up 25 points on the S&P cash, 2.36 billion shares as we start the day. So volume pretty much where it was yesterday on the downside. So we'll have to see how the market closes today, but I would suspect that we've probably got some back and forth for a few days. One of the things that I've always done, of course, is looked a lot more at individual stocks than indexes. The indexes tend to go a lot farther than the stocks themselves and also can be pushed around a lot more easily with things like futures. Individual stock, you have to actually throw real money at. Futures, you can throw a lot at them, move them for a little while, but not a long while. Anyway, we have a market that is up on some decent volume today. The downside of this is we've been going through stocks for the last 4 or 5 days, and just I have not seen this many stocks testing lows with such ridiculously light volume since March of 2009. So that makes me think that we've probably got a decent bounce out of here. One of the downsides, though, is that you want to see stocks close back up into the previous trading range in about 3 days. If they don't, they tend to bounce and then go back and retest the last low yet again. So we went 4 days into 4 days yesterday, really didn't get our bounce. We got it today. Makes me suspect that we could easily have one more downside test in this market. They tried to push it down a little earlier, back down to 1900 on the S&P cash earlier in the day. Of course, we were up to almost 1920, but 1916 for the high today. And it just makes me think that we've got a little bit of pushback. Now, maybe it's a 50% retracement of this bounce. Maybe it's something else. I don't think we've had it today. I think we're probably going to mess around here for a little while. The bears are going to go after this market one more time. And if we get back down there with incredibly light volume like we did last few times, I think it's not going to be a question of which stock, but all stocks that rally. If we get down there and volume expands and blows through those light volume lows, then, of course, we're talking lower. But I dislike that a lot of these stocks did not bounce back into the trading range by the third day and even the fourth day by some. The volume still was incredibly light. That means there aren't a lot of sellers, but we need buyers too. Got a few of them out here today, but my guess is that as soon as some of the bears that were a little greedy decided to stay a little long to the party, having a little bit of regret today, we'll probably be coming after this market again soon. And that's what we'll be talking about kind of on and off today. In the second segment, got a few questions for our friend Andy Heck before he leaves on vacation for about 10 days. A lot of discussions out there. I just wanted to ask him to set the record straight. So he'll be doing that in the second segment. And, of course, as always, we want to start off this show with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1981, Uncle Sam issues new 20-year bond treasuries at 15.78% yield, an all-time record high interest rate for any U.S. government issue. Analysts say they expect that yields will have to go higher to attract stronger demands. Yields promptly begin to go down and keep going down for the next 12 years, which gives you just an indication of how trendy or trending the bond market can be over time. I suspect we're getting to the point where it's ready to start its next trend. And if it hadn't already started it, I think when we look back 10 years from now, we'll probably figure out that this was the trend and this is kind of where it started. A kind of a double shot of history today. I just thought it was so interesting. Back on today's date in 1720, after nearly hitting 1,000 in the summer, the price of the South Sea Company stock plunges to $180 a share on the London Stock Exchange market. The first great speculative stock boom has collapsed, and hundreds of the smartest and most powerful people in England are left with losses of up to 80% in a matter of weeks. One legislator proposed tying each South Sea director up in a sack with a monkey and a snake and throwing them into the river. Angry mobs assault and nearly lynch stockbrokers in the street. Oh, the good old times. That's the way I think about it. Anyway, we've got a lot of stuff going on out here. A few things I do want to talk about, Andy, with Andy in the second segment. But kind of interesting statistical data out this morning from Bespoke shows the worst days of the year, and this is one of them. Now, kind of interesting to see this pop up a little higher. But even in the last few years, this has been a statistically bad market day. If we look at 2011, of course, this thing was off 2.5% today. But of days that are pretty horrible out here, this is statistically one that is fairly nasty every year. And, of course, there are organic reasons for a lot of things that happen in the market. They're not just random, or tarot cards don't show that that's what they're all about. But very interesting if you're watching on Tiger TV here. The most consistently negative days of the year. Of course, if we look around October and right after Thanksgiving and a few other days, they tend to be days that things happen economically or very close to them, and that's why you constantly see it. But there's few days out here that get into this 38% of the time positive. That would be 62% of the time negative. But after the last 50 years, fairly good indication that you always have a weak September, and maybe we're getting just a little jump start on it because it was so vicious out here. I do not suspect this is the end of the trials for bears on this market, but we shall see. I think we get at least one more attempt for them to bury the knife a little deeper and twist it in those that are long. Google's got lots of interesting news going on. We'll be talking about this in the Tech Insider Hour on Tom O'Brien on Friday. But Google's released their new Chromecast, and a lot of people go, well, it's not a big deal. Well, to me, what's the most and the largest selling consumer product of the last 5 years? A lot of people will go, well, it's the Apple iPhone. Well, if you're talking in dollars, the answer is yes. If you're talking in units, not so much. Chromecasts are the hottest selling products, consumer products of the last few years, and they have new versions coming out, which I thought was very interesting. One's kind of like a Sonos, if you're familiar with that company. I think that they have a lot of trouble in the near future. But their new Chromecast basically works on just audio systems. So if you have a big stereo system in your house, you just want to play music through it, you can do that. But very interesting. Second versions of these things kind of look like about the size of a watch, a train conductor's pocket watch, let me put it that way. And it plugs into your TV. So it's like a dog with a tail or something like that. You plug the tail in. It's kind of a little different, a little snappy. But we'll talk about the ins and outs of that on Friday. But I think I'll be getting one. I have a couple of them already. Google Maps is now available on Apple's Watch. We talked about their new SDK, and finally somebody being able to figure out how to get access to some of the issues. I don't know if that's going to change anything for people that have iWatches or watches, Apple Watches, but maybe the first decent app that actually does something other than tell the time is available for the Google or the Apple Watch now. A bigger issue, and this is why I wanted to kind of talk to Andy in the next segment, is China getting involved in buying here when everything is supposed to be going through the floor. We have at least two companies that have the Chinese extremely interested. Western Digital spiked about 10% today when a Unisplendor Corporation, affiliated with Tingzhou University, agreed to buy a 15% stake in the data storage company. I find this so interesting because, of course, one, I suspect that the future of this company is, as a going concern over the next few years, is probably in doubt. But more interested in the fact that this company that is buying Western Digital has a lot more to do with the Chinese military and the communists than anything else. Of course, there's no company that I think is free from communist influence or the Communist Party influence in China. But, the CIA was more than, and the NSA, I guess the NSA, more than active in putting in embedded software into Western Digital and Seagate hard drives so that they could download any of the data on it without anyone being wiser. And of course, that happened over a number of years, almost 4 or 5 years. I wonder if we are not now in a issue where we see a battle for control of these big companies, because of course, if you control that company and you are in that country, you have the ability to move and change these devices so they can spy on anybody you want. But certainly interesting. This company, from what I heard, fairly decent connections to the Chi-Coms. So that's the first one. We also have another company that has decent connections to the Chi-Coms, making an offer for Synaptics. Now, they make the touch-sensitive and touchscreen technology, but they were basically rejected a takeover bid from an unnamed Chinese investor. And that investment group offered to buy Synaptics for $100 a share. That was valuing the company at almost $4 billion, according to Bloomberg. The offer would have represented a 70% premium to Synaptics Tuesday and their closing price. Now, why would China do this? Well, they may be back at trying to manipulate the rare earth mineral business yet again. And of course, if they can control who and what is made in the way that these panels, these touchscreen technology panels are made, and of course the producer of them, they'll have the patents for them, and they're basically looking at a few things. One, the rare earth minerals that are involved in this, maybe they can get back to a cartel on that again. But more interestingly enough, if they own the patents, they can go after manufacturers that make touchscreens here in the United States. So a lot of action. It looks to be a 5-year plan from China in getting involved in technology just today, much less than last week. When we come back, we'll talk to Andy a little bit about this. But we talked a little bit about maybe them getting involved in buying down at the bottoms and their history of doing that. So we'll come back and talk about China and maybe some other things.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And yeah, somebody brought it up in the den. It happened at the top of the hour, and that is Jack Dorsey is going to be the permanent CEO of Twitter. I don't know if he's going to share with Space or with is it Foursquare or just Four? I think it's Foursquare. Or it's just Square, isn't it? Yeah, I think it's just Square, the payment processing company. And it's probably going to move a little bit, but I think that it moving a huge amount probably has changed. And we've got Andy on the line now.
Bring me the head of the false prophet, Jim Cramer.
Since he asked me to play that incessantly during my show, I figured I'd give that to him. Just a little morsel there for coming on my show. How you doing today, Andy?
I'm doing good, and there's nothing I like better than hearing that, Dave.
Anyway, hearing a lot of theories going on about Glencore and what its effects are, and some of the people kind of pushing an idea that maybe this is like long-term capital management. There'll be a lot of spillovers and fallouts into other parts of the commodity business. Is there what would be, or what is the effect if this thing really kind of blows up and even goes further down? I know we've had a respite here for a couple of days, but that it doesn't always mean that that's not it. I saw Enron have a couple of nice rips higher too. But,
yeah, absolutely. But, we have to sit back and remember that, the Glencore thing is focused around the price of copper, and I've been reading a lot of things lately that, the future of Enron goes with the price of copper. We have to remember that copper, although it was at $4.60 a pound back in 2011, and now it's half that price, in 2000 it was 85 cents a pound, and in 2008 it was $1.25 a pound. And the big producers adjust to lower prices for this. Now, there's a lot of leverage out there in a lot of these commodity companies like Glencore that have built up over recent years. And I think that it would have been much worse if the U.S. banks had stayed in the physical commodities business. But we've kind of been spared this. A lot of the potential long-term capital management effects of lower commodity prices by that. And we have to also remember that lower commodity prices are also good because prices go down, and that in itself is stimulative. So for the commodities business itself, yeah, maybe you're going to see some companies. I think Glencore, I'm sure they're making plans to take themselves private. I'm sure they're talking to the Chinese and some other very close associates in the commodities business because the current share value doesn't represent the value of that stock right now because, they have tremendous collateral. They have all of these reserves of commodity production that they've bought over recent years in the ground. Granted, they have a lot of debt. About $20 to $30 billion in debt. And yeah, there's going to be a knock-on effect of this thing. But at the end of the day, I think commodity prices are going to go lower because of China, and I think that we are going to see a little bit of disappearing of some of the weaker producers out there, but that'll just lead to higher prices in the future.
I've been bringing up the Baltic Dry Index for, the last week, 10 days. This thing ripped much higher, and that pretty much had to be on two fronts. One, higher demand for those bigger ships, and when you drill down to it, it basically came into the crude ships, and maybe
exactly because the cash and carry trade, buying crude and storing it, or I would imagine the Chinese are buying a lot of crude oil to add to their strategic petroleum reserve. At these lower levels, they were looking at it at $107 a barrel last June, and now they're looking at it at $45 a barrel. It kind of makes sense to buy some and tuck it away.
Well, we were talking about two big tech companies that the Chinese are getting into today. I kind of thought I heard you talking about the possibility maybe Glencore getting bought by the Chinese too.
Yeah. Well, at least taking, Ivan Glassenberg and his partners there are ex-Mark Rich guys. They're not going to sell out totally, but they'll certainly take them on as a partner. Maybe you'll see you remember back in 2013 when the Chinese came in and they bought out Smithfield Foods, the largest U.S. hog producer?
Yep.
So maybe you'll see something like that with the Glencore, I still think, and it's not just Glencore. We'll also have big problems, I would imagine, if commodity prices keep dropping with BHP Billiton, with Rio Tinto, with all of these very large commodity-producing companies that have extended themselves. I've been writing a lot. I know you've seen the pieces.
Well, we're going to break. We're going to break here, Andy. I want to thank you for calling in. You have a great vacation.
Thanks, bud. Bye.
Bye.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Just wanted to make a couple of things. I had some people email me. You can email me too at path@tfnn.com. And Smokeless in Sonoma, Mr. Scott, says Harmony, 44 cents. That's when gold turns around. Digress into pontification. I don't know if that's an actual question or a statement. Maybe he needs to start smoking again. Harmony, HMY. You know, we've got, we didn't talk about the dollar index, but this thing, I mean, every indication this thing wants to go higher. Every time it gets above 96.30, the Treasury Department comes out with a fire hose of cash and hoses it down to cool it off a little bit. I don't know if there's a lot more to say about that other than the fact that it looks like it's getting harder and harder to keep this thing below that level. I don't know if the Treasury has enough cash. I imagine they could print anything amount that they want. Question is, will they go to what those kind of extremes to keep the dollar weak? But 96.28 currently on the S&P cash. Harmony. I don't know where he gets his 42 for. Maybe it's way back in the chart somewhere. Is that what he's looking for? I don't know. Anyway, for a year and a half, I've continued to think that some of these companies need to go out of business. I don't know if my opinion, I know my opinion really hasn't changed. These tend to be the worst run companies in the world because, of course, it's all feast and famine. The CEOs make a lot when gold goes up. They starve for years while it goes down and does nothing. Not a lot of volume down here, but I tell you what, gold does not seem to be acting well to me. It's off for $11 today. It's not acting like it's going to hell in a handbasket, but it's also acting a lot more like it did all through the 90s than the 2000s. Don't see much in there. We were long UNG. I think I bought it at $12.10. Sold it at $12 yesterday. And I just didn't like the way that it had been acting through, got 11.54 today. It's hard for me to figure out if this is any kind of real indication. There's a natural long short position in crude and natural gas, and that is the people that want to hedge their crude purchases normally short natural gas, and it almost becomes a self-fulfilling prophecy. Crude goes down, natural gas goes up. Now, just in the short term, let me put it that way. In the longer term, of course, price and demand come back into scope on that. But it continues when we look at crude, that's off, 20 cents on the day. Not a lot happening out there, but I continue to think that China and some of these other countries are starting to think that a bottom is in on crude. I just didn't like the way that this thing continually got sold every time it bounced. Anyway, don't think there's a whole lot in there. And maybe it's a lot more like gold, and gold is a lot more like it was in the 1990s right now. I just don't see the kind of juice out of there. But I don't know, rambling thoughts. Let's get to some of the other stocks out here. Wanted to start with the materials sector. First of all, because it was one of the stocks that had been giving one of the bigger signals out here. What I disliked yesterday makes me think maybe we get one more test, is higher volume yesterday than the lows of the day before. If we're looking at the XLB on this one, the August 24th low came in with 27 million shares at $39.35. We got into that. The low of the day didn't quite pierce that low 2 days ago. It certainly did yesterday. Volume, though, increased, which I don't like. That's kind of, in a nutshell, why I'm a little bit nervous. If volume would have been even lighter yesterday and then popped back up here, I would have said that probably the lows were in. I think the lows are in already, but I think that there's a good opportunity that we see maybe in 3, 4, 5 days, one more test of these lows on a lot of these stocks that had no bottoms or no volume. Let me put that in the bottoms. Window wide, another one of these stocks that actually pierced its low. I think we talked about this one. We were waiting for it to actually go below the previous low, close back above it, and that is to prove the point. August 24th on Wyndham, $70.42, 2.1 million shares. Got into it with 1.2 million shares yesterday and 1.6 million the day before as it kind of got into that. I would have liked to seen, again, very light volume. But of course, today, are we seeing a lot of people rush in? And the answer is no. About 700,000 shares today. And that's why I think that we have the ability, probably within a week, let me put it that way, within next Wednesday, of maybe trying to come back into these one more time. The volume really evaporates out here. I think we probably have a low end that's probably good for 60 to 90 days. But I would have been all long today if this had continued on. And Weyerhaeuser. This one has been making a nice little low on 3 successive occasions. Of course, August 26th, $26.84 with 10 million shares. We get into it with 4.7 million shares on September the 11th. and even lighter volume on the 28th with 3 million shares. Yesterday, we get into it with 3 million shares, but it doesn't go down that low. Today, a nice little pop, 1.3 million shares. But I think that we're probably going to be meander around here a little bit. We're going to have the bears come after it one more time. And if we get down there and they really decide to start covering their shorts, we start seeing a big intraday reversal, which we didn't get yesterday. I thought that's what we would have yesterday if the bottom had come in. I figured we were closed up, somewhere around 1905 or 1910. I thought we'd have like 15 minutes of major short covering. We didn't have that, and that's generally a good indication that we've got some kind of longer term low in. So probably a few days higher, probably a gap back down. They'll probably try to, at least I think that there's probably a 70 to 75% chance that we see these lows of yesterday once again. And I think we're probably going to see them on lighter volume. And then we're going to start seeing volume as we do come off those lows for higher prices. I think we've had a huge discount in this market, more than the indexes actually give us a view of. You can give me a call at 877-927-6648. What do you think of dries in that sector? Can it survive? That's what I don't know either, is DRY. It certainly looks like that. I would have to go back and dig into dry ships and find out. But so far as I can tell from the Baltic Dry Index, the only ships getting any action at all are crude ships. So when you're going through these dry shippers, what you need to find out is what kind of ships that they have. The Baltic Dry Index basically has 3 kinds of ships, and it depends on whether they can get around the Cape of Good Horn, whether they can go through the Panama Canal, or whether they can go through the Suez Canal, and whether they can at all. They're so big that's maybe there's 4 kinds. Anyway, those ships carry various things like crude and or iron ore. And you have to figure out exactly what they're carrying and which ones are in there. And if you dig far enough in, you can. But you want to get a dry ship company that really, I suspect, is focusing on crude. There's nothing. I've talked to Andy yesterday after the show. There wasn't a whole lot that he saw that really made him think that grains or iron ore or copper or anything had really turned around, that almost all that money that had popped in the Baltic Dry Index was about crude. So that would be it. What else is going on here? Oh, we've got a few more. Vail. A little bounce out of this one again. I like the light volume down here. I don't like these stocks that are continuing to stay below their previous low, no matter how light the volume is. August 24th was $4.13. We've got $14.11 right now in Vail. And this is what probably just it make me only have one long position today. And this thing is getting awful close. We bought one this morning, and it had a huge rip out here. And I'm almost thinking I'm going to go ahead and take the money before the end of the day, but I'm going to watch. But anyway, the Vail out here needs to stay above 413. And I kind of learned the hard way that a lot of these stocks with no volume can still go lower. Valspar Corporation, we talked about this one yesterday, had a nice little rip in the morning. Again, not a lot of volume, wasn't able to hold the highs. I kind of like the fact that this thing is at least back above that $70.88 low of September 1st. But you need these things to hold them. And like I said, there's for all these stocks that are really ripping higher and keeping the indexes higher, there seems to be 3 or 4 out here that seem to be acting somewhat muted. Let me put it that way. We talked yesterday about the TZA, and a pretty good indication that when you have an index that can't get 50% of the previous volume, that you probably have a fairly decent indicator. We were looking at the August 24th high at 1395 with 41 million shares. Got into that yesterday with 18 million shares. Of course, that tells you that at least the bear case out here did not have enough energy to this the first time. But guess is that they will come after it once more. Not a lot of volume, so maybe we come back down to maybe 1280, something like this, and then it will take one more attempt back up there. If you have light volume at that time, I suspect this thing rolls and rolls quickly. What else do we have out here? Ultra short Russell, same kind of setup out here. We had 3.5 million shares on August 24th, $44.74. Went above it yesterday. We're back into the trading range today. I would have liked to seen this thing do its reversal yesterday when it had volume of just 2.1 to that 3.5. Makes me think that they can get one more run at this. Not a big pullback today and not a lot of volume either. And that makes me think that the bears out here continue to think that they've got another shot at it. Qualcomm, we were talking about this one. Nice bounce out of it today. Not a lot of volume either so far. And again, could this be a bottom or a longer-term bottom? It could. But just like I want to see stocks pop back into the trading range within 3 days, I want to see volume and people pouring into these in the next 2 days now that they're back into the trading range. Qualcomm went after that big August 24th low with that had 29 million shares, $52.59. Went below it, did not close above it yesterday, which is one thing I, again, dislike. Did pop above it today, but to 7.5 million shares. So I'd like to see something in the neighborhood of 15 million shares that makes me think that there's a sign of strength of these stocks coming off the bottom. One of the other things I thought put a bottom in, or at least a temporary bottom in, was these China stocks. TripAdvisor, August 24th low, $62.50, 2.7 million shares. Got into it yesterday with 1.5 million shares. Did pop again today. It needs to close above 62.50. Probably is going to do that. It's just, well, it's going to be close. But anyway, not a big sign of strength out here on some of these others, but it did pop for a day. Again, you can email me at path@tfnn.com. You can, of course, call me at 877-927-6648. And, of course, you can post a message in the den. MDM. Take a quick look at this. Question is whether I think this is going down on lower volume. And the answer is no. On my power law vector indicator, this last leg went from a 0.4 in the previous leg to a bigger one. But again, these stocks that have no volume, it doesn't tell me a great deal. If you got a stock that's doing 25,000 shares, or is that 250,000 shares? You know, if it's not doing about 300,000 shares or more every single day, it's very hard for me to believe. In fact, I did a lot of studies on it, that volume really means a great deal. All that means is that you have a crowded theater with a door about the size of a doggy door, and everybody comes in it, and everybody goes out that same doggy door. So what does that mean? That means you don't get, when it's going up, prices go astronomically. When it's going down, everybody's fighting their way through that one tiny little doggy door to get out. And that's why I don't think technicals mean near what they mean on a stock that is liquid. So doggy door stock, that's my new name. I just thought of that. I want to put that out. See you later. No, we'll be back in this next spec. Give me a call, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've got some other stocks out here. Again, a lot of these stocks, light volume. Of course, Krispy Kreme, the maker of delicious donuts with its secret ingredient, which is not so secret, it's almond powder. But they are addictive. This thing had bad earnings, whacked out on September 10th, got down to 1462. 1492 is when Columbus sailed the ocean blue, wasn't it? So 1462, who knows what happened out there. But 9 million shares against 730,000 shares yesterday. 300,000 shares now. I don't know. I lived close to one and gained 10 pounds in the 90s, and it's hard for me not to believe that it will continue to be and do well because of its tasty treats. But everybody's acting a lot more healthy, except I see 10 times more people in the little golf carts running around Walmart who couldn't walk more than a few feet. So I don't know. I don't believe all this healthy talk. I don't see it in the data, just me walking around Walmart. Hewlett-Packard, wanted to see how this one did. We talked a little bit about it yesterday. Again, a little bounce, not a lot of volume. That means that even though we might have a low end until this thing splits, maybe a little bit more back and fill. Of course, there's probably going to be a few companies that make some money off of this. And the question is, are they going to hype this or push it for a little while? I think the answer is yes. The story of Hewlett-Packard will be written 6 months or 9 months in the future. It won't be in the next 3 months. So I can't really say that I would have people buying it. They, like IBM, are really betting their future on a new technology, and we'll have to see how that does evolve. Now, see, what else did I have going on out here? Just wanted to see what else out here. They ain't over yet. 6 degrees. Oh, I've got this.
And now, for 6 degrees of market separation with Dave White. Rambling tales of mixed metaphors and tortured analogies that might make a lucid point if given enough time.
Well, we've got 2 minutes here, so I'm going to use it to make some mixed metaphors and win the award once again at TFNN. Couple questions. One was, why do I think Apple's doing poorly? I think that movie's coming out, and I think that a lot of people think it's probably going to put a little tarnish on Apple. There's 2 movies coming out. That will be one of them. Of course, the one I will be out watching is The Martian. I read the book, and I read or listened to the audiobook, too. It was a fantastic book. I hope the reviews so far are extremely good on it. And being kind of an engineer at heart, I love the idea of somebody working out their problems. And that'll be out. I think that's Friday night. But both the Apple movie will be out. I think Apple's praying that the Martian movie does a lot better than it. But not a lot of good stuff going on. But even some of the stocks that we're looking at today, if I could find them now, where's it at? Like Tesla, didn't really react all that well to the news out here. This thing's up it's off 55 cents. News is really not driving a lot of these big tech stocks like it was. Apple kind of selling off on the news. It's up 55 cents or so. Not a big deal. Went back and retested the lows. Is the wheel's going to fall off Apple? I don't think so, but I wouldn't want to be thinking that Apple, I'm not betting on Apple probably until after this first weekend of this movie. I think a lot of people are going to look at Apple, the company, differently. And it's going to cost them a little bit in the PR stance. But that's part of it. Go see The Martian. I bet it's a much better movie. At least I think it's going to be. I'm going to like it, and I'm going to watch it. In the meantime, we'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.